Facebook paid $1 billion for 13 employees and zero revenue. The board approved it in days. In April 2012, Facebook agreed to acquire Instagram for $1 billion. Facebook employed roughly 3,500 people and generated more than $3.7 billion in annual revenue. Its directors met regularly at headquarters in Menlo Park Future Image. Headquarters, reviewing infrastructure spending, product growth, and acquisition proposals that usually move through months of internal analysis. Mark Zuckerberg held both chief executive and chairman roles. Major purchases typically followed a familiar rhythm. Product teams evaluated integration, finance reviewed price discipline, and directors approved transactions after internal consensus formed. Instagram entered the conversation through a different channel. The company had 30 million users, 13 employees, and no revenue. It operated mobile first while Facebook's core systems were still optimized for desktop publishing. By early 2012, mobile photo uploads across social platforms were beginning to exceed desktop submissions. Instagram's growth curve started appearing in Facebook's internal planning model's future image data chart. The numbers alone did not trigger an acquisition review. Instagram functioned largely as a complementary service. Users frequently posted photos from Instagram directly into Facebook timelines, reinforcing engagement metrics inside Facebook's network. Product teams described the relationship as platform expansion rather than competition. Instagram increased photo activity, Facebook captured distribution. Then Instagram adjusted its sharing interface. The change looked minor inside the app. Users could still publish images to Facebook, but the design began emphasizing Instagram's own internal network first. Photo streams increasingly circulated inside Instagram before appearing anywhere else. Future image, mobile screen. Two interpretations developed inside Facebook. One group treated the change as routine product evolution. Any successful application would eventually emphasize its own identity. Another group noticed the structural implication. If Instagram built its own social graph before deeper integration occurred, the balance between platform and partner would shift. That distinction did not reach the board immediately. Instead, the conversation surfaced inside product roadmap meetings in Menlo Park Future Image meeting room. Engineers reviewing mobile engagement trends noticed that Instagram's publishing cycle was dramatically shorter than Facebook's own development process. Instagram updated its app frequently. Facebook's mobile architecture still depended on systems originally designed for desktop browsing. Then a funding round closed. Instagram's venture investors finalized a financing deal valuing the company near $500 million. The round closed on a Friday. The number circulated across Facebook's business development group during the weekend. Mark Zuckerberg called Kevin Systrom on Monday. The conversation was not the first between them. Years earlier, Zuckerberg had attempted to recruit Systrom while Facebook was still assembling its early product team's Future Image, early startup offices. Their previous contact made direct communication possible without formal negotiation structures. At this point, Facebook had not initiated its usual acquisition procedure. Normally, product teams would produce detailed integration analyses before any executive contacted a target company. Finance would test valuation assumptions against revenue models. Directors would review the results before negotiations began. None of those steps had occurred yet. Inside Facebook's executive offices, the conversation focused on timing rather than price. Instagram's Android version was about to launch, potentially doubling the service's user base within months. If that growth occurred after the recent $500 million valuation, negotiating leverage would shift quickly toward Instagram's founders. Meanwhile, another detail began circulating quietly. Large technology companies had started examining the mobile photo category more closely. Twitter had introduced image hosting features. Google had integrated photography tools into Google+. None matched Instagram's momentum yet, but the category was becoming strategically visible across Silicon Valley. That possibility changed the sequencing of Facebook's discussion. If multiple companies began evaluating Instagram simultaneously, the process could transform into a formal bidding environment. Under those conditions, Facebook's traditional internal review timeline might eliminate the opportunity before negotiations even began. For several days, the conversation remained informal. Zuckerberg and Systrom discussed product direction, mobile publishing behavior, and the long-term structure of social photography networks. Instagram's founders had built the company deliberately as an independent platform. Facebook's infrastructure had accelerated early growth, but Instagram was increasingly defining its own user network. Inside Facebook, finance teams began running valuation scenarios. A $1 billion acquisition would represent the largest purchase in the company's history. Instagram generated no revenue. Traditional acquisition frameworks relied on financial returns or operational efficiencies. Instagram offered neither in the immediate term. The strategic argument focused somewhere else. Instagram concentrated exactly the behavior Facebook expected to dominate mobile communication: lightweight content creation, rapid photo sharing, and visually centered interaction. If that activity occurred primarily inside Instagram rather than Facebook, the location of engagement would gradually shift. The board still had not met to review the possibility. Instead, executives debated structural terms. If Facebook offered a partnership or minority investment, Instagram could continue raising venture funding independently. If Facebook offered full acquisition, the founders would likely insist on operational autonomy inside Facebook's organization. At that moment, another constraint entered the timeline. Facebook's initial public offering filing was already under regulatory review. Future Image (SEC) filing. The company planned to list shares publicly within weeks. Any major acquisition completed before the IPO would require immediate disclosure to investors. The disclosure requirement created procedural pressure. Proving a $1 billion purchase days before a public offering might signal uncertainty about Facebook's own mobile strategy. Analysts reviewing the IPO documents were already asking how quickly Facebook could adapt its advertising model to smartphones. Declining the acquisition introduced a different uncertainty. If Instagram remained independent or accepted an offer from another company, Facebook would lose influence over the fastest-growing mobile photography network connected to its platform. Directors finally received formal briefings. Materials outlined Instagram's growth trajectory, the $500 million venture valuation, and the projected impact of the Android launch. Future Image growth chart. Finance teams described the purchase price relative to Facebook's available cash and stock reserves. Product leaders described the behavioral shift toward mobile publishing already visible inside Facebook's network. Directors focused on a narrower question. Was Instagram still a complementary platform expanding Facebook's ecosystem, or had it already become the foundation of a separate mobile-first social network? The same data supported both interpretations. Instagram users frequently distributed photos through Facebook timelines, but engagement increasingly occurred inside Instagram before spreading outward. If that internal network matured, Facebook's control over photo distribution could weaken gradually rather than suddenly. Another procedural factor complicated the decision. Facebook's IPO timetable meant the acquisition could not remain confidential for long. Once disclosed, the purchase price would become one of the largest strategic signals attached to Facebook's public offering. The board reviewed the constraints rather than the personalities involved. Proving the deal meant committing $1 billion before Facebook had demonstrated a working mobile advertising system. Rejecting the deal preserved financial flexibility, but allowed the most dynamic mobile photo platform to remain outside Facebook's ownership. Neither outcome could be tested quickly enough to guide the decision. If Instagram's Android launch accelerated growth, the company's valuation might double before another negotiation opportunity emerged. If growth slowed, the strategic concern would fade on its own, but the market would not reveal which outcome was coming before the IPO. Within the boardroom, the discussion narrowed to sequence. If Facebook intended to acquire Instagram eventually, moving before a competitive bidding process emerged might preserve negotiation leverage. Waiting for further evidence could invite additional buyers and eliminate that advantage. The directors authorized negotiations under a specific condition. Instagram would operate independently after acquisition, maintaining its brand, development cycle, and internal product leadership. Future Image Instagram interface. Facebook would provide infrastructure and capital, but avoid immediate integration into the main platform. The agreement was finalized in April 2012. Facebook offered approximately $1 billion in cash and stock, reflecting both Instagram's recent venture valuation and the premium required to close the transaction before other bidders formalized interest. Instagram accepted the proposal within days. Externally, the story simplified almost immediately. Financial commentators described the acquisition as an aggressive attempt to eliminate a future competitor. Others interpreted the purchase as defensive preparation for Facebook's public offering. Future Image news headlines. Inside Facebook, the interpretation remained less settled. Instagram continued operating with a small team, releasing updates independently, and expanding its user base across both iOS and Android devices. Facebook's advertising systems gradually extended into the platform over several years. What changed immediately was Facebook's acquisition framework. After Instagram, the company began evaluating emerging platforms through a different metric: the speed at which new behaviors concentrated inside mobile ecosystems, rather than the revenue those platforms generated immediately. The file closed with board approval and integration guidelines. The question it didn't answer: whether Facebook acquired Instagram to own the future of mobile or to prevent anyone else from doing so.